While we go across to our guests, you'll also see a standard disclaimer that this is a self-explanatory disclaimer. That's something that we would like to keep on place. And with that placed, let's go across to our first guest then. Piyush Jain joins in from Morningstar. Piyush, hi, morning. You were listening in. Anything that stands out? Of course, Geo is what he spoke about, a rollout this year, phased rollout. Would that be a highlight, or would there be any other highlight for you?
Definitely. I think it's one thing which everybody is keeping an eye for. And what this AGM does is that now we know that they're going to launch out in all the states at one go from 2015 onwards. So that is something which is worth watching out for. Mm-hmm. I think in our view, telecom is one of the biggest businesses which they're investing in, and it has the potential to turn out to be a very margin lucrative business as they move forward in the coming years. So that is one thing. Second interesting thing, I think, which I was just noting out is that it would be very interesting to see how the oil and gas business in the new countries like Venezuela, which is a very heavy oil rich country, it shapes out. So that could be one of the triggers in the coming quarters if they are actually able to hit out at some a good oil rich block. And I think CBM is one of the things which they have clearly stated that in 2016 the production would be ramping up. So I think that should be something interesting.
Okay, we have Dipan Chet, Head of Institutional Research at HDFC Securities, joining in with his view as well. Dipan, what were the key highlights according to you from the Reliance AGM?
For me, I think the biggest single takeaway was that I'm getting a very, very aggressive capex guidance coming in from the chairman. Our and popular estimates were in the range of about anywhere between 20 and 22 billion dollars of capex over the next 3 years. That was the number that we were toying around with, and we are now hearing 30 billion, and believe me, that is not a small difference. And what this tells me, especially at a time in this country when we are talking of reviving the capex cycle, it tells me about the incremental confidence that the top management of India's largest private sector organization has on the business prospects in this country over the next 2, 5, 10 years, or call it what you will. So I think that was a substantially large, difference. 1.8 lakh crores is a huge number, and I think it can only bode well for a company like Reliance. That said, the challenges to earning a fair return on this incremental capital employed will persist, because much of the incremental capital is going to get deployed in what can be arguably called non-core businesses for this group. So I don't know whether you would still want to call retail and telecom non-core, but for the Reliance of the last 30 years, these are definitely non-core businesses, just like upstream was non-core at one point of time. So the challenges will persist there. Both telecom and retail will see substantially higher capital allocation. I would be very confident and sanguine on their investments in, shale gas or upstream oil and gas in countries outside of India. Where things would not be so clear are obviously things like telecom and retail, where the challenges will persist in terms of despite the higher capital allocation. So it's going to be a little bit of a wait and watch on what they are able to achieve. I think there are some very capable companies, cost leaders, market leaders, perception leaders in telecom. Retail, I think they've had a clearly advantageous situation because a lot of the other players have been in financial stress. But in telecom, I suspect the going is not going to be as easy as it sounds.
Okay, Ambareesh Baliga from Edelweiss is also with us. Ambareesh, good morning.
Good morning.
You've been positive on the stock, but post the AGM, is there anything that excites you, or was this just a routine kind of statement?
No, I think it was more or less routine, except for the fact that the launch of Reliance Jio is slightly getting extended more than what we thought it would. But whatever said and done, I think they are clearly getting into their growth phase with their various projects also coming online, and especially with the sort of margin expansion which is being talked about. I think overall it's still clearly on the growth path, and our bullishness would still remain. And like I've been saying earlier, our immediate target was about 1175, 1200. I think that should be achievable quite soon. And once you have the gas pricing in place, I think you should see much higher levels.
Okay. Ambareesh, what did you think of the capex guidance? We just had Dipan telling us that maybe that would be a little worrying, considering that it would be higher at around possibly $30 billion as opposed to the $20 to $22 billion that was forecasted earlier.
No, I don't think that should be too much of a worry, because even going ahead, raising funds in a bullish market, which we're talking of over the next couple of years, I don't think that will be too much of a issue for a brand like Reliance.
Okay, Ambareesh, thanks a lot for that quick take. Piyush, just a word on oil and gas. He spoke about the need for market-based pricing. Would that still be the biggest issue for stock going forward?
Definitely. So if you see the market, this is the stock price where it is now. I think the market is already expecting that the gas pricing probably would get a clarity under the new government. So that will be a very important issue for the entire oil and gas sector at present, for a transparent policy, for a clarity in the gas pricing. So definitely should be very important.
Okay, Dipan, what's your call on the stock now? Reliance Industries, it's almost 1100.
So we are constructive. I can't say this is a conviction pick for us. We are constructive. I think much of the upside in Reliance is likely to get delivered in the stock market, depending on what happens to business trajectory, particularly in telecom, because sentimentally that's going to be a big thing in terms of incremental capital deployed. Second thing, on the gas pricing, I think we've been talking about $8.4 for so long now that any price less than that, let's say about $7.50 or so, if you will allow me a wild guess, is going to be seen as a creditable achievement for the current administrative or government dispensation. I'm not entirely in agreement with that personally, but I think the markets will take kindly to it, or the citizens of this country are likely to take kindly to it. I won't, but then that's how it is. And even at $7.50, I think incrementally it's very, very positive for Reliance in terms of not only pricing for their current gas output, but the visibility that it is likely to unleash in terms of higher gas output, and indeed encourage them to participate in further rounds of MELP and build out their upstream business in this country. So yes, this is a time to be constructive. Despite the higher capex guidance, I think the overall mood and investor sentiment in the country has given the courage for this management, which is the largest private sector company, to aggressively step up capex guidance. We'll remain constructive. I don't think it's a table thumping buy.
Okay. Piyush, what is your call on Reliance?
So the 4G telecom, it's very important for the sentiment of the stock. So our view and how the stock is going to behave is going to depend very heavily on how basically they are moving ahead on the telecom. Because refining and petrochemical, as per the Asian industry scenario, is already facing an oversupply for the next 4-5 years. You are seeing capacity in Saudi, China, Korea and India coming up. So what's basically going to drive the margins and higher returns on invested capital is the telecom, more Reliance markets, more digital, and how the oil and gas is shaping up. So from our side, at present where we are, I think Reliance is already factoring in the gas prices, and from here I think any upside trigger or any higher fair value estimation should be driven by how they are able to seamlessly launch the telecom operations, because that I think over the next 10 years should be a big value churner for the company.
All right, Piyush, thanks a lot for dropping by to our studios. Dipan, thanks to you as well. That's Reliance Industries with its AGM.